So, good morning once again. So, what we simply do here on a daily basis is to review all the markets I published during the course of the weekend. And this was as a result of trying to make sure I do a personal follow up where you could actually see me analyze the market and at the same time identify trading opportunities as well. And so, what this simply means that I will be taking the four pairs I normally share during the weekend. That is the US oil, the USDJPY, the XAUUSD, and the GBPUSD. So, with that being said, here I will be diving right into the chart. But before I go into the chart, we have a couple of, I think, a macroeconomic event that we are looking forward to today, and that is the FOMC minute, which is coming up later in the day. That's like in about 10 hours from now, we shall be witnessing the FOMC minute, and obviously, participants in this market has been anticipating this event, and we can see how price action has been a little bit risk averse in that direction, as most major players in this market stepped aside to watch what will really happen close to the event and after the event to make a decision for today. And we're also going to be looking at this on the chart, as we can always see the reflection of the behavior of the participants in the market as price action. So with that being said, here we also have other macroeconomic event which came in for the New Zealand dollar, the monetary policy statements, the interest rate decision, and then for the euro we have the harmonized index of consumer prices. So since we are not doing anything on any pairs that this event will be affecting, we're going to be neglecting that and focusing on the FOMC minute for today. So with that being said, here I will be diving right into the chart at this point, and the first commodity we are going to be looking at today is the US oil. And obviously, when we look at the chart here, you would realize that price action has been quite choppy in this market, as we have been witnessing a consolidation phase between the $77.40 area and the $76 area since the beginning of the week, giving us a beautiful channel which further emphasizes the indecision in this market. Now, during the live session yesterday morning, I made mention of the fact that I will continue to look out for buying momentum as long as price remain above this zone here between the $77.90 area and the $76.35 area. And why did I say that I will be thinking of buying? Well, if you look at the structure here and look at the way price action has been reacting to that level since the beginning of the week, you would notice that there has been some buy pressure at every time price action comes exactly within that support level at the $76.35 area. So the same thing also happened here during the early hours of yesterday, and we anticipated that if price action continue to trade above the $77.90 area, we shall be comfortable with our buy position, with the hopes that price action breaking out of the $77.40 level will give us that emphatic confirmation that we want to be going bullish for the week. And to further support these buyers here, we had this bullish trend line identified after connecting the series of higher lows. Now, with the situation we had here yesterday, though we had some buy position running here where price action climbed above the $77.90 level to the upside, but during the New York session yesterday, we saw a situation where price action dropped, broke down that bullish trend line, came back within the channel there, and what we saw around that area was very, very interesting, as we saw selling pressure resume right below the bullish trend line, which was broken yesterday to further emphasize the strength of the sellers. And if you remember what I told you yesterday, I said for me to be selling the US oil, I want to see price action do a breakdown of the $76.35 level. Remember, that was our support level at the beginning of the week, as we saw price action trade within the channel where the $76.35 level was serving as the support level. We saw what happened here during the early hours of yesterday, which was the reason why we were looking out for buying opportunity. After price action retested that level, saw buy pressure from that same area. Now that we had a situation during the later part of the New York session where we saw the breakdown retest of the structure, it was a beautiful opportunity for us to join that decline to the downside. And I made mention that if price action further breaks down the $76 level, we shall definitely be looking forward to adding more position to our existing trade. And this was duly updated on my trading view platform. And then we had this, sorry, I think the US oil. Okay, so I updated this during the New York session yesterday, where I explained.
Good evening, everyone.
Okay, so we had this commentary here. Okay, so this is what we said here. So this was yesterday morning, where I said if price action drops below the $76.35 level, we will be looking for selling opportunities. And this is what happened during the New York session yesterday. And so that is that. So if you had been with me on my trading view platform as well, you will definitely have catch that publication there. So right now price action is running with about the first position is running with about 85 pips in profit, and the second position is currently running with about 54 pips in profit at this point. So the most important thing we want to be doing now is to secure this current position. As you would remember that we have a key level around the $75 level. And for the sake of clarity, let me bring out my line chart here so that we can identify that level and at the same time use it as a criteria for more trading opportunities. So if we connect this point, we have something like this. So I would like to give this a blue color to differentiate it from the other. So we have it at the $75.60 level, which $75.60 level. Right, so I'll give that a blue color too as well, and place it at the bottom right hand side. So this is what we have here. And so remember, we have a support level at that same level here last week Friday here, where we saw buy pressure. So we need to be very, very careful around this area, as we need to see how price action will be reacting to this level, so that we can decide if we are going to be adding more position to our existing trade, or we might be getting ready to join a bullish momentum from that area. So now, how do we intend to take advantage of this? That is, if price action gives us selling opportunity here, how do we want to see if it's good for us to sell? Well, in order to have a better perspective into what is going on here, it's important that we scale down to a much lower time frame, something like the 15 minutes time frame, where we want to see something like a breakdown of that structure, which has actually happened. Selling pressure, that is, we start seeing price action reject the $75.60 level with selling pressure around that area, then this will definitely be an opportunity or confirmation to add more position to our existing trade. And if you are not yet in this trade, well, it will be a very good opportunity to join that decline to the downside. Then, in addition to the $75.60 level here, if we bring out the line chart and look at the current structure we have in this market since the New York session yesterday, you will notice that price action has been bearish. And if we connect the series of lower highs here, we have a beautiful bearish trend line, which we could actually use to guide trading activity for today. So if we do that, you can see price action has uniformly respected that bearish trend line in the last 24 hours. So if at any point in time we have a situation where price climbs back into that structure, followed by selling pressure, rejection of that bearish trend line, then definitely it will also be a beautiful opportunity for us to join that decline. So we have a bearish trend line right now identified. So what this simply means is that if price action continue to trade below the bearish trend line, we want to feel comfortable in our current sell position at this point in time. However, we should also take into consideration the possible breakout of that trend line too as well. And remember that we are at a very strong demand zone, which is the $75.60 level here. So if price action start fine buying momentum around the $75.60 area, we need some confirmation that buyers are actually coming in this market. So what we are going to be looking out for is buy pressure around this area, which will definitely lead to the breakout of that trend line to give us that confirmation that we are good to buy the US oil for today. So it's a very important thing that we understand how price action reacts to the $75.60 level, which will take about an hour thereabout before this formation would happen. So my advice is that we stay tuned in and be rest assured that I will be dropping an update on my TradingView platform if I find any tradable structure around that area. So that is that on this one. If you have questions, feel free to drop your inquiries in the comment section. So with that being said, here I will be moving on to the next pair for today. If you have questions, feel free to drop your inquiries in the comment section. I will be checking the comment section from time to time to see if there are any questions in that regard. So the next one I will be looking at this morning is the USDJPY. So this is another major currency pair that we have been monitoring since the beginning of the week, and in fact we were lucky enough to be part of this buy position that started at the 134.150 level. That was on Monday when we saw this situation where price broke out, retested the 134.150. And since then, price action had moved considerably well, as it has moved over 100 pips before we started seeing the sell momentum that resumed around the 135.00 level. And if you look at the importance of the 135.00 level, you can see last week's trading session, to be specific, on Friday, we saw price action climb to that height, and this is the first time price will get to this level since the beginning of this year. So it's a very, very significant level there that we need to be careful to and understand how price action reacts with that level to decide if we are going to be adding more buy position to our existing trade. And currently we have about how many trades? Okay, we have a buy position here, we have another one here, and we have another one here. So we have about 3 positions running here if you had been part of this trading opportunity since Monday. Now, in addition to these structures we have here is that bullish trend line you can see on your screen right now. If we connect the series of higher lows here, we have this bullish trend line figured out, which has been supporting the bullish momentum since the beginning of this week. And one thing we can see here in the last 24 hours is the fact that price has been caught within a channel between the 135.00 level, which has been the resistance point for this week, and the support level at the 134.700 area. And what this simply means is that we are at a critical point in the market right now, as price action appears to be choppy in the last 24 hours. And whenever we have this kind of scenario, it's more or less a reflection of the indecision in this market, as majority of the participants in this market are definitely anticipating a major event which will be a catalyst to drive price movement. And when we looked at our economic calendar this morning, we can see that in 10 hours from now, we have the FOMC minute coming up, which is a high impact event which definitely everyone will be looking forward to. Now, the most important thing about the event is that we want to see how participants in this market will be reacting or anticipating this event, and what we want to be looking at is the price action, which will give us a hint into the psychology of the current market. Now we begin to see some hints in the market right now as we have a consolidation phase. And one thing I normally do when I find this kind of flat channel like this is to remain patient to see how we could actually position ourselves to catch a trading opportunity. Now, for those who are already in this buy position from Monday, I hope you've moved your stop loss to somewhere around the 134.500 level, where I said we want to be using to secure the current position that we are in right now. Now, if we look at the channel that we are having here within the 135 and the 134.700, it appears that price action is bearish. And if we connect the series of lower highs here, we have something that looks more like a bearish trend line here, and at the same time giving us a clue into a possible trend continuation pattern around this area. But if this is going to be valid, we want to see price action do a breakout of that trend line, where probably price action retest the trend line or the 134.850 level, the level which I identify here. Look out for buy pressure above this level, then that will be giving us a confirmation to join the rally to the upside. That is, if you are not in this trade. But if you are in this trade already, it will be an opportunity to add more position to our existing trade. Now, if price action continues in such a way that it breaks out the 135.00 level, then definitely we want to be using that leverage, that platform at the 135 level, to add more position to the existing trade. Yeah, so we still remain bullish on the USDJPY. But one thing I also want us to take note of is the fact that the selling pressure we have been witnessing here around the 135.00 area since the beginning of this week. And look at what this level has been in the past. It has been a strong selling niche in the past here. So what this simply means is that if price action, if the selling pressure here continues in such a way that it breaks down this bullish trend line, which has been supporting bullish momentum since the beginning of the week, there is a tendency that this could be a signal that the trend line no longer have the capacity to continue to hold bullish momentum. And if that is going to be the case here, we want to be seeing price act, we want to be selling, looking out for selling opportunity at the breakdown retest of the 134.700 level, and selling pressure below that structure will definitely be giving us a confirmation to join a selling opportunity from that area. So this is what we are going to be looking forward to on the USDJPY. We are already in the buy position. We have moved our stop loss accordingly, secure the current position here, and then let's wait out and see how price action will be reacting to this current level. So if I do a recap of what I'm talking about here, we are looking out for a breakout of the trend line here, which shares a confluence with the 134.850 level to add more buy position to our existing trade. However, if a breakdown of the 134.700 happens, we scale down to our lower time frame, look out for rejection of the structure, then we could join a decline from that area. And remember that we have a buy position since Monday here at the 134.150, and I told you to move your stop loss to somewhere right around the 134.500 area just to secure the current position. And let's monitor this current price action and see how price will react or anticipate the FOMC for today. So that is that on the USDJPY. If you have questions, feel free to drop your inquiries in the comment section. So moving on, I will be moving on to the next pair, and the next pair we are looking at this morning is the XAUUSD. And on the XAUUSD, we this is how the week started here. So we initially had a consolidation phase between the 1,845, which was serving as the resistance point for the week initially, and then we had the support level for the week sitting around the $1,838 level. And you know, whenever we have a flat channel like this, all we want to be doing is to remain patient, to wait out for either a breakout of the channel or a breakdown of the channel for trading opportunity. And in fact, on Monday we saw the situation where price broke out of the 1,845 level as price action moved about 400 pips a couple of times in that direction before we were taken out of that buy position on Monday. And since then, price action has been finding lower lows and lower highs, and as a result of these lower lows and lower highs, we identified and connected the series of lower highs here to give us this bearish trend line that you can see on my screen. And this has actually been guiding our selling position since the beginning of the week here. But one thing we realized is as soon as price got into the 1833 level here, that was on Tuesday, we started seeing buy pressure resume around that area, hereby negating all attempt by the sellers to break down that structure. And one more thing I want us to lay much emphasis here is the fact that price is currently trading above a very strong bullish trend line around the 1820 level. And to make things a little bit clearer here, I would like to show you what we identified in the video. Remember, we had a video on Monday, during the weekend, where we identified the structure here on the 4 hours time frame. So we saw the situation here where price action has actually come back to where price started the year. So the year started on a bullish note when we saw the breakout of the 1820 level. And what we saw during the course of last week trading session was quite interesting here, as we saw price action come back into that same structure where it was broken at the beginning of the year. And what this simply tells us is that we are at an equilibrium right now. As you know, from a technical standpoint, whenever we have a breakout of a structure, we expect that one point in time price will likely come back to do a retest of that structure to incite another wave of bullish momentum. And it appears we are beginning to see something like that, but we cannot just jump into such conclusion at this point, as we really need to understand the current situation around the consolidation phase that we have been witnessing around this area since the beginning of the week to decide what our next line of action will be. And you know, since it's been a long-term bearish momentum here, at least in the last since the beginning of the month, it has been bearish. So there is still a likelihood that price action could break down that demand zone to the downside to continue a bearish momentum. So what we need to do here is to understand what is really going on around here, and as a result of that, we have a structure on the 1 hour time frame which can help us to identify a possible trading opportunity for today. And if we look at what has been happening here in the last 24 hours, you can see price action has been choppy, as we had a situation where there is an indecision in this market, and probably participants are anticipating the major event like the FOMC coming up later on today to guide trading activity. So what I did here is to identify the channel where the consolidation phase is happening, and this is happening between the 1838 level and the $1833 level. And so we have a flat channel here. And what we simply do whenever we have a flat channel around like this is to wait out, be patient, and wait out for a breakout or breakdown of this channel to give us a signal of where price action will be going. And what we have seen here in the last hour is a breakout of the 1838 level, which is a beautiful signal that we might be going bullish for today, or probably in anticipation of the FOMC. So at this point in time, I will be having a buy stop order sitting right above the 1838 level, with the hopes that price action will continue. Since we already have a breakout of structure, price action comes to do a retest of this level, possibly with buy pressure around this area, then we could be joining that rally to the upside. And if a further breakout of the 1845 level happens during the later part of today, then definitely we want to be looking out for another buy position around that area. So that is one scenario we are looking forward to buy the XAUUSD for today. Now, if we are going to be selling this particular market here, that is, if we don't see price action climb above the structure, and considering the fact that this market has been on a bearish turn since the beginning of this month, we are going to be positioning ourselves right below the 1833 level here, where a breakdown retest of the structure will be welcoming a sell position in this market. So what I want to be seeing here to sell the XAUUSD for today is to see price action break down the 1833 level, selling pressure below the structure on my lower time frame. Then definitely I want to be joining a decline to the downside. So we have a simple setup here that we can use to guide trading activity for today. So what I'm simply saying here in summary is that we are looking out for buying opportunity above the 1,838 level to join a bullish momentum if that is what is going to be happening. And if that is not what is going to be happening today, price action breaks down the 1,833 level, then definitely we want to be joining a decline from that same area. So if you have questions, you can drop in your inquiries in the comment section. So I will be going ahead to take the last pair for today, which is the GBPUSD. So on the GBPUSD, we during the live session yesterday, we were actually looking at a possible selling opportunity here. And one thing we laid emphasis on at the beginning of the week is the fact that price was initially caught within a channel which was within the 1.20450 level here and the 1.20150 area, which was the support level of that channel. And one thing I normally say whenever I identify a channel like this is to look out for a breakout of the channel or breakdown of the channel for trading opportunity. And during the session yesterday, we saw the breakdown of the 1.20150 level, and price action actually dropped to as low as with about 30 pips in our direction before we saw this bullish momentum to the upside, which took us out of that sell position at a worst case scenario break even. And if you didn't move your stop loss, it's okay, you might have been taken out with about 28 pips loss at that point. Now with the buy stop order sitting right above the resistance point of that channel here, we got the buy position triggered, and price action actually moved about let's say about 100 pips in our direction before we started seeing this huge consolidation phase that began around the 1.21500 level. So at this point in time, I would like to zoom into the current structure so that we can see what is really going on around here. And for those who are taking advantage of the buy position here yesterday, I don't know if you had closed your profit, you have taken your profit, and if you have not taken your profit yet and you're still in this trade, I will be advising you to move your stop loss to somewhere right around the 1.20800 level to secure this current buy position as we continue to monitor price action. So right now we are at a critical point in this market, which is around the 1.2100 level here, which is going to be our yardstick for trading activity for today. So what we want to be looking out for here is to see how price action will be reacting to the 1.2100 level in the next couple of hours to decide what our next line of action will be. Now, to further emphasize the importance of the 1.2100 level, I would like to scale up into the 4 hours time frame so that I can show you how important the 1.200 level is. Now, if you look at the current structure we have here, we have the 1.2100 level around this area. So this is where price action started the year. The year started on a bearish note as we saw selling pressure around the 1.2100 level here. Price action dropped to as far as the 1.185 before we saw the breakout of this level one more time to incite that bullish momentum. Now price action is back into where the year started here, and you remember that 1.2100 level has been a strong selling niche in this market. And if price action remains below that 1.2100 level, this area is a strong selling niche for participants in this market. So because of the sell memory around this area, I will be leaning towards a bearish momentum below that structure. Now, in addition to this current structure here, if we look at what has been happening here since the month of January, you can see that price action had been bearish as well. So as a result of this, let's scale back down to the 1 hour time frame, since we all know the importance of the 1.21 level right now, and look at what we have right here. So since yesterday we had this bullish momentum to the upside, and if we take that into consideration and looking at what has been happening here, price has been unable to break the previous high. As you can see, we have the situation here. So I would like to identify that structure, the structure here, That is the 1.21500 level, a very strong psychological level, which is okay. I would like to 1.215. So let's label this area 1.21500 level. I'll place it at the top right hand side of my screen, and then we have something like this. So since price tested the 1.21500 level, what did we see here? We started seeing selling pressure from that area, and price action was unable to break out of the previous high, which is a beautiful signal that we might be not witnessing a sell-off in this market anytime soon. And if we connect the series of lower highs here, you will see that we have a bearish trend line we can use to guide trading activity for today. So with a bearish trend line identified here, we want to see price action continue to trade below this bearish trend line to be comfortable in a sell position at this point. And I shared this on my TradingView platform this morning, where I made mention that we should be selling if price action breaks down the 1.2100 level. So this is the latest update I shared on my TradingView platform. Hold on a second, let me pause this. Okay, so we have something like this. So this is where we were, and I said buy position secured. That is, all the buy position we have here should be secured by moving our stop loss to protect the current position. And then I said price action remains choppy ahead of the FOMC minute, and we said we should be selling the breakdown of the 1.2100 level here. And this is exactly what happened. If you had got your position triggered, it's okay. So what you want to be doing now is to move your stop loss to somewhere right above the resistance point, which is falling right above the 1.21500 level, to seek to move to protect this your portfolio against any sort of pullback. So we want to ride the move all the way down at this point. And if you had missed out on this opportunity here, that is the breakdown of the 1.2100 level, what I'll be advising us to do here is to wait and see if price action will be doing a retest of the structure. So a retest of the structure of the 1.2100 level, or the bearish trend line followed by sudden pressure around this area on our lower time frame, will be welcoming additional position to our existing trade. So if you had missed out on the sell position we already have triggered right now, I would advise you to remain patient and see if price action will be doing a retest of the structure. And if a retest of the structure happen, then definitely we want to be joining that decline from that level. So this is the last pair we are taking for today. I really appreciate every single one of you for being around, and I hope to see you same time tomorrow, 8 a.m. UTC, as we come here again to review this market and possibly give you ideas against the New York session tomorrow. So on this note, I wish you best of luck today and hoping to see you same time tomorrow. Do have a wonderful evening. Bye bye.